$334,000 could be wiped from Australian home values in an extreme but plausible scenario predicted by the Reserve Bank of Australia. In this video, I want to go over the paper released by the Reserve Bank of Australia discussing Australia's high household debt and the increasing risk of an Australian market crash. If this video brings you value, please like. For the holy YouTube algorithm, it giveth and it taketh away. And comment your thoughts below. Do you think the Australian property market is heading for a market crash? What do you think we should do about it? Or do you still believe that property prices double every 7 to 10 years? And subscribe for more awesome content on property market updates in Australia, the economy, personal finance and investing. Let's get into the video. Australian house prices could fall by up to 40% in the extreme but plausible scenario, said the Reserve Bank. And when they say plausible, that's a nice word for saying likely. This was done in a paper released by the Reserve Bank of Australia discussing Australia's extremely high household debt. Such a fall would take the national median house price from $552,000 all the way down to $331,000, a huge $221,000 loss for the average household. In Australia's most expensive market, Sydney, it would see the Sydney median house price fall from $866,000 all the way down to $531,000, a massive $334,000 drop that's definitely going to hurt. The RBA paper release, How Risky is Australia's Household Debt, noted that while Australia's debt has increased substantially over the past few decades, they said it is in the hands mostly of those who can afford to service it. I disagree. I think they're only saying this because they want to increase confidence, because if they said what they really think is happening in the market, confidence would collapse and that would make these declines accelerate. The only reason people have been able to service the debt since the 90s, like they said over the past few decades, is because in the 90s recession, the one we had to have, the interest rate set by the Reserve Bank was 17.5%. That's right, 17.5%. And guess where it is now? 0.25%. They've dropped interest rates over 17% so people can keep servicing more and more debt. Well, guess what? They can't do that now. So what are they going to do this time? They said most households that hold this debt are people that have low risk of unemployment. Well, I don't know how that's going to be, because even though the jobs that are high risk, they're going to stop spending in the areas that are meant to be safe. They said that most households that are at risk of big changes in asset values to income tend to have lower leverage. I agree with this, but what's happening now is that when property prices decline, those loan to value ratios will increase, and so too will the leverage. Not to mention that lots of people are deferring their loans and property prices are dropping. So one thing is happening, their property price is dropping, but their mortgage is increasing because the interest is still being accumulated. This is just putting a bigger risk on the market that they're not talking about in this paper. The RBA said that in the instance where property prices do fall by 40% and unemployment by 8%, which we're almost at already, the banks are well placed, they say, to handle the downturn, but they said consumers will drop consumption to hang on to their properties significantly. The RBA put the reduction in consumption from peak to trough of 12%, and it said that reduction in consumption is actually worse than unemployment rising, and when people reduce their consumption they stop spending, which makes unemployment situation worse because the companies that employ people are no longer getting that income. And like they said in this paper, the risk is if unemployment reaches 8%, which we're almost at already, and also underemployment by Roy Morgan's reporting standards has us at 23%. That's right, 23% of the workforce is underemployed. Now, we've had a huge amount of stimulus by the government bringing out JobKeeper and JobSeeker, but those are now being reduced. They also gave $750 cash payments, and people were able to take out up to $20,000 of their superannuation, and this injected a huge amount of cash, and that is why we're still seeing retail spending strong because of this flood of cash in the system, and people haven't felt this recession yet. They said while the falls in prices are extreme, the fall in unemployment is happening right now, and we are very close to that figure. This scenario will be similar to what happened in other countries during the global financial crisis, where we were able to avoid recession, and in those countries like Ireland that saw their home values drop by 55%, Spain fell by 37%, and the US house prices fell by 32%. But hey, we're Australia, we're different. It's all good here. It'll never happen here. In this scenario, superannuation funds also dropped by 30% and the share market crashed by 40%. The RBA said that the reason why debt is getting so high is because here in Australia we have higher incomes relative to other countries, and also because the amount of mum and dads that buy rental properties. But this is going to put extreme pressure on these mum and dads because rents are being slashed. And they're saying that it's not because of excessive leverage, it's just because of investments and high incomes. I think high leverage is coming. One thing that the media and the RBA is not discussing is the amount of rental property coming onto the market and the huge decreases in rents. In my area where I'm renting, I've seen rents slashed by 20%. And that just means that all these landlords that are negative gearing, and if they have multiple properties, they're not going to be able to afford to hold on to them even if they want to, and they may be forced to sell, or the banks may say, you're a risk. And we've seen this in the past. Westpac, NAB, they send these letters to these investors and they say you've got 28 days to find another lender or sell now. The Reserve Bank isn't the first bank to predict big falls that could be coming. Remember in May, the Commonwealth Bank released that article where prices could fall 32% in their worst case scenario. Well, their worst case scenario is starting to look like today, because we're going to have the worst quarterly contraction on record released next week. Economists are predicting a 6% decline in GDP for the June quarter. So, what does all this mean for everyday Australians like you and me, and what can we do to prepare, and what can we do to possibly get that dream home we've always wanted? Now, this isn't financial advice. I don't know your personal situation, but what I've done is paid off high interest debt. I've increased my emergency fund because hard times are coming and it's better to be safe than sorry. And I've also greatly reduced my living expenses. So if things do worsen in the economy and, the worst case scenario happens and I do lose my employment, I do have some money there, and also my expenses are quite low, so I can live off the small JobKeeper or JobSeeker payment. That way, if property prices did crash over the next 2 years, because who knows how long this could drag out. This is only the beginning, guys. People saying, oh, it's been so resilient, it's all good, it hasn't crashed. Property just doesn't crash overnight. It's not the share market, it takes time. People don't just sell straight away, they'll try everything to hang on. So, if you do this, if you save, put yourself in a good position, there may be some deals that could come up over the next year to two, who knows, and you may be able to finally get that dream property. A perfect example is Perth. Look at Perth. It's been declining ever since 2014 and it's down over 21%. People every year were pumping out saying it's a bottom, it's a bottom, it's a bottom, and it just kept falling. So who knows, it could even decline for the next 5 years. Okay, now what do I think could happen? Now what I think could happen in Melbourne and Sydney, where there's been the most speculation and the most amount of investors, and where houses are the most unaffordable, I think property prices could fall pretty easily 20 to 30%. Again, depending on the area, because every suburb has its own market. The Australian property market isn't just one market. So, don't believe that it can't crash, it definitely can. Then other areas like Perth, Hobart, Queensland, they may see some more modest falls because house prices aren't so unaffordable there, but Queensland does have the highest unemployment rate of 8.8% in Australia. But hey, who knows, the government could come in because they love the property market, and I'm sure that something is going to happen. They are going to bring out some scheme to try, but when confidence drops en masse and people think that they can get a better deal, they're not going to take up those offers. So maybe the government will remove stamp duty for everyone. Maybe they'll give cash grants to everybody. Maybe they'll let overseas investors buy properties more easily and remove the increased stamp duty for overseas investors. Something I'm very alarmed about and very concerned about is all the media and ScoMo telling people to take up this 5% first home buyer deposit scheme. This is going to be a disaster. It kind of sounds like the 2007 real estate market crash in the US, when anybody could get a loan. They were highly leveraged, they had no income, and that's when we saw a big crash. Those young struggling families that are buying for emotional reasons with a 5% deposit in Melbourne or Sydney are highly likely over the next year to 2 years to fall into negative equity and become a mortgage prisoner, not being able to refinance or sell unless they want to have debt hanging over them and still having to repay when they leave. So what I'm doing is I'm continually monitoring the situation because this is crazy. Things are changing literally by the day, by the week. We have to keep up to date, and I'll keep you all up to date. I'm waiting to see signs of the economy recovering, but there's not enough strong signs there. We are seeing little things here and there, but it's not strong enough. And also I want to see signs that the declines are stopping before I ever start thinking about buying my next property or upsizing for my next property. And probably most concerning thing that I'm still seeing, especially in the comment sections below, is people that still believe that property only goes up, people believing that the government will save them, that they will save the real estate market. I'm sure they will try, but once confidence in the market drops, no matter what the government tries to bring out, if people don't have a job, they can't take advantage of those schemes, and we're not having the immigration that we had before for wealthy migrants to come and bid up these properties. You and me need to prepare now. We're heading into one of the worst recessions in 100 years. I haven't lived through a recession. Probably a lot of you never lived through the Great Depression, but things definitely aren't looking good. So it's better be prepared just in case, because they all said that in the third and fourth quarter, everything was going to be okay. But guess what? They just tell you the story to try to boost your confidence. They don't actually have your best interests at heart. They just want you to keep spending and keep taking debt. Unlike the other market downturns for the property market, the Reserve Bank was able to drop interest rates, which they're no longer able to do. So they're not going to be able to use that tool. So guys, prepare now. Things aren't looking good. I'd rather you be prepared. And what's the worst thing that could happen? You pay off debt, you have a good emergency fund, you actually live a financially free or less financially stressed life. It's a win-win situation. Now, if you haven't already, you better subscribe, because next week I'll be bringing out a property market update video where we go over the latest data for the housing market to see how much property prices fell in August. Especially it'll be interesting to see how much they fell in Melbourne during the lockdowns. To all my loyal viewers that are still watching, thank you. Thanks for your support. Please smash the like button if you have not already. Please comment below your thoughts. I love chatting with all of you guys. I try to reply to everyone, and I'll see you in the next video.